Hey guys, welcome back. In today's video, we are talking about why AMC is the biggest, brokers stopping AMC again, time until margin calls, and many more in this video. First, we're taking a look at this. AMC Theaters has the most IMAX screens among movie theater chains, especially in North America. A 2025 Hollywood Reporter article confirms AMC operates the most IMAX screens in North America. Regal has around 100 in the US, whilst others like Cinemark have fewer. So we've already talked about the size of AMC. We understand in terms of how they are the biggest, and it's why we talked a lot of the times when we talk about the box office doing well, we are the one that benefits from it the most. And the reason why I wanted to mention this is because on top of everything that AMC is doing in terms of investing into more premium screens, in terms of trying to open up more, trying to cut down operational costs, this is something that we have to realize, which is how it links with the box office. And as you guys can see here, Zootopia 2 is trying to become the biggest Hollywood animated movie of all time with $1.8 billion worldwide. So let's talk about the two links together. Firstly, we've already said AMC is the biggest. And so when we see news that are like this, that are talking about how well a film is doing, that are talking about how, whether it's worldwide, whether it's in the US, whether it's North America, when we look at all of these things, you have to realize at the forefront, the ones who are benefiting from this is AMC. We've already talked about the partnership between AMC and Netflix already. We've seen how well that has done. We talked about the EBITDA, we talked about the record attendance. And so fundamentally, when you take a look at AMC, you understand how well they're doing. And you understand that if they are able to keep continuing growing at this pace, at this size, it's only a matter of time before the profitability goes off the roof, before where everyone sees the opportunity in AMC. And when we talk about opportunity, we've already seen how institutions have already counted in because they factored everything we just talked about. It's why we're looking at the institutional ownership of AMC to get higher and higher per quarter, and we are realizing why short sellers or previous people who were negative on AMC to have now flipped long on AMC. Now, on top of this, you can see they're allowing institutions to buy AMC. What they're failing to do, what they're trying to prevent, is from retail to actually hold more of AMC. You can see Fidelity isn't allowing transfers of AMC stock from another brokerage account. I've been trying for a few days only to receive a temporary error message after trying to put AMC stock from Charles Schwab to Fidelity. Seems fishy. Now, this could be a problem from both parts. Firstly, we've seen how AMC and GME are always the stocks that faces problems when it comes to these brokers. And when you take a look at in the past in terms of how these brokers have helped out institutions, it's no surprise that it's doing so. Now, we've already recently talked about the scarcity of AMC shares. We talked about how real shares of AMC are extremely hard to find by. And it's why the shares that we are looking at on the market right now, the reason why institutions are able to buy is because of the billions of synthetics they have created. And so in this case, the very fact they're not allowing from Charles Schwab to Fidelity would maybe suggest that the synthetic shares at Charles Schwab that people are holding, they are in fact synthetic shares, and that's why they can't be transferred, because how can you transfer the shares that don't actually exist from one broker to another? And so this is something that we may be looking at right now, and it could also be on Fidelity's side as well, where they don't have the real shares as well. They don't have the numbers to actually back it up. They can't afford to mess up their numbers even more. We've seen how these brokers, we've seen how these institutions have tried to make their book look better than it seems. We've already talked about MMTLP before. We've known the situation with all of these synthetic shares. So the very fact they aren't allowing transfer of assets of especially AMC shares, whilst knowing that there are liquidity issues with AMC shares, really raises the concerns of, are both of these firms holding onto synthetic shares and not exposing the truth and not exposing what the real count of shares actually are. And then when you take a look at this, 30 million AMC shares traded, 21.7 million routed off exchange, 72.4%, price goes nowhere. When 7 out of every 10 trades avoids an open market, that tells me everything I need to know. So what we take a look at is the amount of shares that are being traded. And you can see 29.8 million. And this is what we've said. The percentage isn't something that's always important to focus on. Now, in this case, 72%, whether it's 62%, the reason why it's not important is because it gives us an understanding of truly how much suppression is going on. But one of the biggest things we also have to pay focus on is just the volume itself. And so in this case, 29 million shares being traded, 30 million shares being traded, 21.7, so close to 22 million shares were in the off exchange. 7 out of 10 shares are not being actually traded onto the exchange. They are not having effect. And so anyone who understands this knows how big of an impact this will have on AMC, how big of an impact this will have on the price. It's why we've said that these brokers, these institutions, these market makers, they are trying everything they can right now to prevent retail from getting any shares of AMC, to prevent any incentive for retail to get any shares. Because going back to what we talked about here, the very fact they are making it hard to transfer shares is also to try and create an incentive for people to not trade AMC, to not buy AMC. And they're doing so because they want institutions to actually buy shares of AMC. They don't want retail to hold shares of AMC because they've already seen how long we are willing to hold, how much damage we have already dealt to them. We've talked about how much shares, how many total return swaps, how much money have been sunk into this. We are already seeing that because of us, because of the apes, we are creating a whole illiquidity issue that's in the market right now. We are exposing the $1 trillion market. We are putting these firms that has had hundreds of billions of dollars and still struggling for money. And so that's why they're trying to prevent the retail from buying AMC. And now another news article that I want to talk about, and is people's view on AMC and of course the HYMC investments, the Hycroft investment. And it's very important to note the whole thing. Did AMC miss out on the mother lode or lose investors massive profit on its Hycroft exit? Another paid financial news hit piece lies and wants you to believe that AMC was desperate and lost money on its Hycroft investment. So I want to talk about this because this is something that we've obviously looked at in the past, and Hycroft is doing extremely well along with the rest of the silver and gold market. And many people are saying that this was a bad move by AMC, or that this was a terrible move where it actually damaged investors. Now, the very fact we are even seeing articles like this already should tell you about these news articles anyway, because at the very start, they said that AMC shouldn't have bought this. Now they're talking about how AMC didn't do this correctly. So you can see how these narratives are always used for their own benefit. But we are going to be extremely brutal and extremely honest about this. So firstly, we have to realize, yes, had AMC held on to, and remember, they didn't sell all of their shares, they only sold a stake of it, but had AMC not sold their shares and held on for a couple more days, for a couple more weeks, they would have made more profit. That is something that's completely true. However, we have to realize AMC is still holding onto these warrants of HYMC that they are able to exercise. And so they are still profiting as Hycroft goes up. It's just that they are not profiting as much as they could have been originally. You can see right now what we're looking at is that the initial Hycroft investment was 27.9 million. Now, with the existing positions that are still out there, AMC has 51.0 million. And so this is what their current stake in Hycroft is. So they're still making a profit. They still have shares of Hycroft. It's just that they could have obviously made more had they held on to it. Now, does this mean that this was the end of the world for AMC? Of course not, because we have to realize people originally talked about how this was a bad investment. The very fact that AMC is able to do this still and still make money should already tell you a lot. And, yes, it was during the silver market was booming. I talked about it when this decision was first made in terms of how it was awkward timing, how we should have waited a bit, but it doesn't change away from the fact that AMC is still able to make money. And on top of this is about realizing how banks are being affected by the silver market as well. So AMC when the silver is going up, when the gold is going up, AMC is going to be doing well. Let's not worry about AMC. However, the short sellers, they are not going to be in a good position. Firstly, we've seen quite a few margin hikes on silver, and they indeed had a temporary effect. Nevertheless, silver continues to climb while the number of margin hikes is limited. Eventually, we'll see margin calls. How will those affect short positions in other tickers like AMC? So, some of the people we knew who were affected were companies like UBS and companies like Bank of America. And the reason why this is important is because both companies have affiliations with AMC shorts. When you take a look at UBS, we obviously know they're toxic swaps of AMC. So if UBS were to get margin called by silver, you're going to be seeing how they're going to be in a very bad position and how these toxic swaps will become even more volatile. Now, if it's Bank of America getting margin called, because they're the prime lender, prime broker for Citadel, they will see a potential force of recall of shares. Remember, Bank of America has the ability to actually liquidate a large majority of Citadel's positions if they deem fit. And so this is why we've said that this margin call on silver can have multiple effects. And if you think that we're only going to be looking at no more, is it going to be the end of it? You can see that this is what we're seeing. Heard yesterday that ECB was buying off gold and silver. It looks like the EU is starting to feel very vulnerable. So it doesn't look like that the volume is stopping down. It doesn't look like that the demand is stopping down. And we're going to be looking at gold and silver potentially get to an even higher level. And more on in terms of if you want to know if AMC is able to obviously profit, we can see high growth has a beta of 1.47 relative to silver price proxied using SLV ETF, which means a 1% change in silver price would equal to a 1.47% in HYMC on average. Now, given the price target for silver right now, and this is by Bank of America, between anywhere 135 to 309, we're looking at around 121 up to a 466.7% in HYMC movement. And so bear in mind is that AMC is still able to make this profit. AMC is still able to sell their shares when it goes up. Yes, they could have made more, but with any investment, you could always have made more. The big thing is that they have remained their investment safe. They have kept their capital safe while still being in profit. And you can even see why isn't the financial media reporting on the silver squeeze and effect enormous infusion of cash. So this is what we talked about with how AMC is doing extremely well, but these banks, these short sellers, they are all struggling. The New York Fed does not disclose which banks benefits from these cash infusions, but people who follow precious metal markets and other speculative moves have been pointing for weeks to JP Morgan, the nation's largest bank. And so this is what we talked about with how JP Morgan units closed out sold about 5,900 tons of silver it does not own in what's known in this trade as a short sale. So we could also be looking at JP Morgan blowing up. Now, JP Morgan doesn't have any affiliations with AMC shorts, at least none that we know of, but we talked about how if a bank were to fail, if something massive were to happen in the market, the whole economy will be affected, and that will affect AMC and GME as well. And on top of that, the Japan's financial system, when we're looking at the Japanese yen, the Japanese carry trade, this is what's happening right now, how it's imploding in real time. Where if you take a look at the 30-year government bond yield, it surges to a new record of 3.52%. So if you're looking for signs and of what's happening within the economy right now, of what's going to happen to the market, are we looking at a crash? Are we looking at overvalue? Are we looking at inflation? The answer to that is pretty much yes to almost everything. When you're looking at the commodity market, when you're looking at the Japanese bond market and in relations to the Japanese yen, everything it's going bad right now. You can even see here, Nvidia's 4 trillion stock rally faces more threat than ever. So on top of everything we just said, this is obviously the inflation. This is where we're looking at these AI stocks that are overinflated, that are overvalued. And so this is exactly how we know that it's only going to be a matter of time until margin call happens and the countdown's beginning. As always, none of this is financial advice, so do take us a grain of salt. Make sure to do your own due diligence and research, and I'll catch you guys next time.